Honasa Consumer, which is surged in trade as its skincare brand, the Derma Company or the Derma Co, achieves an annual revenue run rate of 500 crores. In our special segment, Value Add on Halftime Report, Mangalam's getting us the details on this. Mangalam.
But a couple of things that are really positive for Honasa, which is the owner of Mamaearth, is now that it's not only the owner of Mamaearth. It always had a lot of revenue coming from Mamaearth and some part of revenue coming in from the recent acquisitions that it made, be it, Aqualogica, the Derma Co, Dr. Shet's, or something like, Be Blunt too. But now, Derma Co has been one of the more successful non-Mamaearth brands in their portfolio, has now achieved an annual run rate of around 500 crores. Does this mean 500 crore for in terms of revenue for the last 12 months? No, but the last monthly revenue that they did equates to about 500 crores on an annual run rate basis. This is the second brand of the company after Mamaearth to go ahead and cross that annual run rate of 500 crores on revenue. And this has been growing fast for the company. In fact, in the first half of this year itself, as of September, the ARR was close to around 350 crores. And remember, at the end of the 9 months or the third quarter results, the company had said that this brand had also turned EBITDA positive. So not only is it revenue accretive, it's also not taking away from the margins, it's adding to the company's margins. And this really assuages analyst concerns about the company's ability to scale brands other than Mamaearth. Not just that, if you look at the 9-month numbers, the adjacent categories of the company have been doing well. Color care category, which they recently launched, has already crossed about 150 crores in annual run rate. Rosemary Hair Care, which was within 6 months of launch as of December, had crossed about 50 crores. So telling you that, the company's hero products, which are basically the onion hair shampoo as well as, the Ubtan business, are not the only ones. They are expanding their ancillary businesses. The company had told us earlier that consumer sentiment has seen some improvement in margin. In any case, it has been growing faster than all the other FMCG companies. But now, the key thing to track for Mamaearth, at least over the next couple of weeks, would be nearly 48.5% of its equity. That's about 16 crore shares come out of lock-in for sale. So there is impending supply, which is likely in the next 10 odd days. So this is one thing that I'll be watching out for, other than the ancillaries, which are doing well. Fundamentally, no real problems in terms of a stock price move. It surged past the initial dip that it saw after the IPO. And now, increased liquidity or increased supply pressures is the only imponderable that we'll keep an eye out on as of 2nd May.
Okay, you got me quite tempted with all of the names of all of those products which you were talking about. Just feel
were you Googling some of them while we were talking?
Just feel like running off to a spa with all of those names. But nonetheless, the stock itself has risen around 24%, like you mentioned, from that issue price of around 324 rupees, which it listed at. Remember, it was a tepid listing. So since then, let's see where it goes. But nonetheless, it's gained around 24% from there. But